GM beats big and eyes a turnaround in Europe. All right, let's get right to it. GM earnings out today posted a surprisingly strong third quarter profit, but the big news is it's expecting to break even in Europe by 2015. This despite nearly $1.8 billion estimated in full year operating loss in Europe, where it sells the Opel brand car there. Just to give this a little bit of context, Opel lost $16 billion over the past 12 years, despite repeated rounds of job cuts. How will they restructure there? Well, they're going to reduce some shifts, cut inventory, and by year's end, 2,600 jobs will be cut there. Of course, Ford announcing that it was closing 3 plants over in Europe. So some relatively good news there for a turnaround, break even by mid-decade in Europe. That's big news for GM. Okay, going to move now to the hotspot, where I'm joined by John Marino, editor of Reuters PE Hub. Let's talk some tech, because Facebook today, it's a lockup expiration day, and the stock is down right now 3%.
It's going to be kind of monkey see, monkey do for Facebook for a little while. Peter Thiel was one of the earliest investors. The earliest investor, sold more than $1 billion worth of stock. Excel Partners, Jim Breyer, he's a famous venture capitalist, has also last week sold 1/3 of his stock in the company. So it's probably going to make sense that the employers are going to do the same. Like you said, down 3%. They've also got until mid-November to finish selling their stock. Everybody's probably going to hold on to at least a portion. You haven't seen the executives sell their stock yet, but for the earliest stage investors, for anybody who's really dependent on liquidity, unless you know you're worth about 10 on the Zucculator, you're probably going to want to get some money back now. All
right, you mentioned the Zucculator. Got to go right to it.
Beetlejuice.
10 billion 6 just in a few moments. He was at 10 billion 8. It's just falling.
But, you know, one of, I guess, the good stories that come out of Facebook was their recent earnings call, that they're finally making the push more towards mobile. They have to do, I guess, something to get on a smartphone permanently, better apps. They obviously really have to compete with Twitter, which we're on.
Yeah. Foxconn also, you mentioned that there's some good news in terms of that plant, right?
Yes, good news coming from Foxconn. They're going to be giving Apple a boost, hopefully. They're obviously the primary supplier for Apple. They're going to be increasingly working with Sharp TV. This could finally be the harbinger for the Apple TV that consumers have so much to look forward to. If that comes out a little bit sooner than scheduled, we might finally see a scare among cable stocks. That's one place.
All right, that was our big segue onto Apple, because the executive shuffle there, Scott Forstall, obviously head of mobile software, out. Retail chief John Browett also leaving the company, down 1.5% today, under $600. Of course, the high was $705. But this is, you know, the new Tim Cook era. Now, yesterday analysts were saying that this is a good thing. Tim Cook's going to be there for 9 years, I think, his contract. And Jonathan Ive, who's the hardware design chief, Apple is nothing if not great design, he's now going to oversee the mobile software. Analysts yesterday saying that perhaps this is a good thing, but the stock's down.
It's probably a good thing. These are Steve Jobs' disciples, you know, some of his lieutenants who are now being phased out. They're going to distribute a lot more responsibility to more executives. Also, later on today on TechWity, we're going to be talking about this in a little bit more depth.
Okay. I want to thank Jonathan Marino first, and then remind everybody to check out the snaps that are at the bottom of your screen for more headlines of the day. And with that, I'm going to turn around and go to the Market Monitor, where Ryan Vlastelica, Reuters correspondent, is waiting. And we're going to look at how the market is doing open today after 2 days close, and we're pretty flat, actually.
Yep, absolutely. After historic closing like we had 2 days, first time we've had 2 days of weather closure since 1888. Not too much action, to be honest with you, on U.S. stocks. It's been very volatile. Here's the main issue, is that there's not too much volume right now. A lot of people are still out of the office, unable to work from home because of power outages, mass transit. So that's one of the main things we're worried about. However, the good news is we were worried that there'd be some kind of problem with the exchanges. Doesn't seem like that happened.
All right, that is good news. Let's go on to the sectors there and look at some home improvement stocks, such as Home Depot, Lowe's, Owens Corning make shingles for your roof if your shingles flew out, which a lot of them did, flew off, and Beacon Roofing. Of course, green arrows there, Owens Corning up over 7%.
Absolutely, not very surprising. This is one of the most basic post-hurricane trades that's out there. You buy the companies that are going to be able to furnish people who are rebuilding and just generally part of the recovery effort. So obviously no surprise there, but those are seeing some pretty good upside today.
All right, insurers. We've been talking about insurers the past couple of days. Let's see what's going on as they sort of lay out potentially, you know, cost for all this damages. Allstate, Chubb, and Progressive. Basically flat to flattish.
Yeah, absolutely. We're still waiting to see what the final cost of the hurricane, or excuse me, the storm is going to be. Until we get there, we're not going to really know how much they're on the hook for. It's going to vary company by company, which ones, you know, depending on how entrenched they are in the region and so forth. So,
and here we have a chart to show that, speaking of being on the hook. In terms of the 5 states affected plus D.C., you can see the market share there with State Farm leading the way.
Absolutely. One of the ones to pay attention to is Chubb, which insures a lot of yachts and mansions and stuff like that. A lot of those were especially hit. just given the regions impacted by the storm. So that one that could be especially cream just later on.
Picked up like toy boats, a lot of them. Okay, gaming companies, because down in Atlantic City where they had a ton of damage to that boardwalk, structurally, Caesars and MGM look okay, but obviously the gaming revenues are going to be way down.
Well, absolutely. We had a lot of people evacuated from these areas, and even when they clear it all up, it's probably going to be a while until people feel that they can actually afford to go to casinos again and just sort of spend that kind of discretionary income.
Yeah, don't want to gamble away your money right now.
Absolutely. These aren't as down as much as they were before, but yeah, it's still a bad sector to be in right now.
Okay, telecom, obviously a lot of problems with telecom with the store, Verizon and Comcast there.
Right.
Flattish at the moment.
Absolutely. I mean, they have more basic kind of repair costs in terms of putting wires back up, labor costs with overtime payment for rebuilding all of this stuff. Yeah. So these are essentially minor costs. I mean, Verizon is of course a huge company. This is sort of a minor expense, but it is something people have to pay attention to. Obviously, it'll be a while before things are up and running 100%. All
right, finally, let's look at a handful of other stocks here affected by storm. Generac, which makes generators, surprise, surprise, up over 17%. Caterpillar, Con Edison, and Clean Harbors, which is a waste management company.
Absolutely.
Look at that, up over 16%.
Absolutely. Well, the first things, of course, in rebuilding after the storm is getting all the debris out there. So we just all hope Clean Harbor does it quickly.
That's right. Okay, Ryan, thank you so much.
Thank you.
Remember, folks, for more news, check out our Twitter feed. That is @Reuters Insider, and our YouTube channel, Reuters.com/ReutersTV. I'm Lisa Bernhard. This is Reuters.